But let's start talking about markets because we do have stuff going on. And if we can jump over to the platform, interesting week last week, Fed announcement.
Yeah.
They just took the equity markets to town on Wednesday. A little bit of a reprieve. Thanks, guys. Dollar had a little bit of a reprieve. They sold the dollar off a little bit. But we look today.
And we're back.
Sterling down 67, euro down, and let's just get into them.
And do we tend to see like a little more liquidity in the markets around the holidays, or what would you say there's kind of a trend, or it kind of is pretty variable?
That's a great question. And 20 years ago or 15 years ago, when the markets weren't, when everyone didn't have this fantastic electronic access to everything.
Right.
In the old days, to trade crude oil, I used to have to fight my way out of the pit. I had to pick up a phone. I remember buying crude at 9 in the morning and getting the fill back, actually, where I got filled 4 hours later. Which is, if you think about it, no one would tolerate that out. You move, you move your mouse across platforms and you have access to hundreds of products. So I think with the electronification of markets and the leveling of the playing field, does it get a little slower out in the holidays? It can. But if things are moving, and things are moving, people are still trading. So are some people on vacation? Absolutely. Will we see probably, if you looked at volume in the U.S. equity markets as a benchmark, the SPOOs, NASDAQ, you'll probably see that volume down a little bit. You'll see futures down a little bit. Used to be down by half, 2/3. It would go from, in Euro FX, we trade 150,000 contracts a pit. It'd go down to 35,000.
Yeah.
Not the case anymore. So we'll see maybe volume be a little bit lighter, especially around, and this is a good point, around the cusp. But what I mean by that is in the afternoon here, we know our futures close between 4 and 5 in Chicago, but Spot FX is always open. It'll get a little thinner between 4 and 6 o'clock when just U.S. is going out and the New Zealanders are coming in, the Australians are in. We don't have the rest of Asia. Markets tend to have a little bit more elasticity, so they'll move a little bit more.
Yeah.
So, we do need to be a little bit mindful of that. If there are any, and we'll take a quick look at the calendar, if there are any calendar events, and there's not a lot, because we're getting towards the end of the month, there's not a lot there.
Right.
We could see a little bit more outsized elasticity, but the old days of it being holiday markets and not a lot of interest, if stuff's moving, and we are seeing things move. I mean, euro right now back below not 105, but below 104. And let's just go out to the intraday, take a look at the hourly. Here, we'll even go a little bit more granular than that. Let's go to 15 minutes. So, Friday we tried up a little bit higher, but we are definitely giving back ground again. We're getting back down to that 103. We're not quite there, but that 103.5. I look at this now. We've gone through Sunday night. The market tried it a little bit higher, coming into the U.S. session. For FX, we're closed Wednesday from Tuesday at 4 o'clock in the afternoon till Wednesday at 3 in the afternoon. We'll open back up.
Yeah.
Same thing on New Year's Day. It's the only time FX closes. Thanksgiving, everything else. Now, futures have like half a day on Tuesday. They'll be closed on Wednesday. A little bit different schedule. So be mindful of that if you're managing positions. Christmas Day is always a very, very light day, irrespective of what's going on.
Your kids aren't going to be or maybe they will. Kids are opening presents and you're like making trades in the back.
Right. It's
can neither confirm nor deny.
Yes.
Yeah.
Right. So, but unfortunately, they basically shut off all the plumbing. But I look at this, and this is again wondering if euro's going to find a little bit of a bounce into year end, or is just this, we're getting bounces now. If you want to trade both sides, that's great. Now, have we gotten some other? We have gotten some other bounces,
right?
From the lows going in, started December and stuff. The question is, what are your expectations? If you're looking for 104 is too cheap, and I think we're going back to 110. that's going to be a tougher trade. You're going to have to
Yeah.
sit with that for a while.
Right.
If you want to scalp the range, which I'm going to just say guess, one standard deviation probably sits around 45 to 50 pips right now. If you want to scalp 50 pip ranges, this market is giving you that. It's not giving you 100, 200. It's not giving you a sea change.
Well, and with the holidays too, like, like you said.
Right. Now, do we sometimes see year-end flows? New Year's Eve is always an interesting day because sometimes we see end-of-the-year flows. I don't know what they're going to be. You could argue, well, there'll be more selling because people will lighten up their books. I don't know. It just depends how corporates and larger funds position who manage at the end of every month. So month end can be a little bit interesting. But we look at especially cable holding in better than everybody else. But you take a look. Sorry, guys. Aussie. We are literally, what are we, 30 pips off the lows. Yeah. So Aussie, no relief at all. The Kiwi, which has been something we've been focusing on more and more, same thing. Not much of a bounce. Yeah. When you see tape action like this, new lows put in, some back and forth. Yes, we tried Friday with a little bit of pullback. From just a tape aspect, the rallies don't hold much time.
Yeah.
We can't, if we had built higher here and higher up here, I'd say, okay, maybe there's a little bit of two-way risk coming back in here. And granted, I'm a contrarian, so it's hard for me to sell a break like this because if we go back and we look at the daily in Kiwi, this is a heck of a break here.
Yeah.
800 points.
Yeah.
Now that's almost 13%, if not more.
Yeah.
So you're talking about a 13% move since October to December. That's a huge move of an FX. So is the market cheap? Absolutely. Is momentum playing a little bit of a role here? Yeah. So for me, when you look at strategy, what are you looking at for? What are you looking for in terms of opportunity? If you want to play the it's awfully cheap game, you have to, first of all, bring your size down a little bit.
Yeah.
If you're a two-lot trader, you're probably trading one lots. This is not the 2 weeks you're going to make a killing.
Right.
You want to stay engaged, and if they're open, I'm usually engaged. So set your expectations a little bit more realistically around, okay, what is this market giving me? If you want to play the low end here, and again, we're going right in the U.S. session on the lows, it'll be interesting to see if buyers emerge or it just continues to bleed down.
Right.
You got to be mindful of, we break 56 cents. We're getting into new territory.
Yes.
And the market's going to get a little bit more dynamic, which means it could have a propensity to run. So I think your expectations both about wins and what you're willing to lose. Again, making those decisions early, better than just buying them because they're awfully cheap. They're down here and you're like, oh, I don't want to get out because they're awfully cheap.
And are you someone who tends to look at chart patterns a lot in terms of things like, head and shoulders or that kind of thing? Or
Great question.
Yeah, I don't know. I'm curious your thoughts on that.
You know what? It's a great question. And let's just do a little exercise because this is...
because I've always thought they were pretty interesting. But anytime I'll study like economics, they'll talk about charts, and it feels like they're more of a theoretical and not as represented in reality. But I've noticed more in Forex that they seem to be a lot more commonly used.
Yeah. And here, we can draw, I'm going to draw a couple of just chart lines for you here. So, and some of the paradox of it too. Now, this is an upward ascending triangle. So the more touch points you want, you've got 1, 2, 3 to the upside here. Really just the one here. We could also draw it against this line here, which gives you a little bit more. You've got 1, 2, 3, 4, 5. Now, it's already taken out that trend line there. Now, here's the challenge with this too, is you can also go back a little bit longer, draw this neckline here, and you can say, okay, this is the trade-off of technical analysis. If you've done it enough, if it helps you contextualize movement, it's great. The pattern recognition piece, you need to be careful with because if you've done this long enough, I can draw you a bullish breakout pattern and I can draw you a bearish continuation pattern on the chain chart. Which one do you want?
Right.
So
Okay.
when there is a lot of people who believe very strongly, I love a chart because it gives new traders a visual of where things have been. I think you need to be a little bit mindful of, and a couple of things. If you do want to be a technician, let me see if I can get rid of a couple of the lines here just to make it a little less messy. As you get closer to the apex of something like this, if we were to come back up and just chew through here, breakout out, breakout down does you no good. You'll get a lot of false positives on that. If you're looking for a descending wedge, which is basically a big down move, some consolidation, and now the market's breaking out. If you look at momentum trading technicians, they're going to look at this as a bearish indicator.
Right.
So can it be? Sure. If that works for you, but here's my challenge for that. We are awfully cheap and the market's broken out. If you're going to sell this breakout, which is, you'd be a seller right here. If you're going to think about, I want to manage both sides of this trade.
Yeah.
Where are you going to get out if you're wrong? Basis technical analysis.
Yeah.
It's got to go back and violate this line. So are you willing to take 50 points of heat to the upside to sell this? If you are, then the pattern
Then great.
Then the pattern can work for you. If you're not, it may not be the right thing. So do I look at it more, some of the more obtuse things like cup and handle and head and shoulders? Sure. I'm not a big line drawer on stuff. Some guys are. Other guys like to use momentum indicators like moving averages. Now, I do look at moving averages, and it's funny. It's the guys who taught me to trade FX 40 years ago were all old school bankers, and they looked at 100 and 200-day moving averages because the guys who taught them did. Now, why is that important? It only is because a lot of guys look at it, so it becomes a little bit of a self-fulfilling prophecy.
Totally.
So I wouldn't. Do I look at it when it gets to a moving average level like that, a bigger one? Do I see if there's a reaction? Yeah, but I don't put too much investment in it. So the takeaway is, if you find that pattern recognition helps you quantify, if the goal is, if it helps you quantify where you're getting in and more importantly, where you're getting out for both profit and loss, it's a good tool to use.
Yeah.
But don't let the charts take over your decision making.
Right.
So it's a great question. I will run through that a little bit next week. So, but good question, good walkthrough. Dollar certainly has a ton of strength, no matter where you pick it right now. It'll be an interesting week to see if that continues as we roll forward. That's it for today. Have a good day, guys. We'll see you back here a little later on this week.